Yo guys, what is up? What is up? Welcome back, man. I think this is gonna be this will definitely be one of the last videos I do in this little mini series. I am gonna talk more about the OTE and the breaker setup later, but this is gonna be a little something for you to use alongside your breaker setup and everything else. All right. So today we're gonna be talking about deviations and what they are and how you can use them, and when to use them and what the confirmation for them is, and yeah, just the usual stuff, guys, like everything you need to know about this strategy, right? Now, all a deviation really is, it is just a false break above or below a high or a low. Okay, so plain facts, all it is a deviation, literally like a deviation below a structure low or a high. And basically that is more or less really all it is. Like it's nothing crazy, guys. Like, it's just more or less a price leg that has gone below a low and it's now come up above that low or high and it's continued higher, right? So essentially what you're looking for, all right, in this kind of price action is that a false break is more or less just a bit of price action where price is broken a low, but it's pulled back inside of the range, okay? And this technique is really, really good, especially when you have long periods of voids, of gaps in price, just big areas of liquidity that haven't been raided yet and that haven't been filled in. And I love these setups on the dollar and on FI because they're usually really, really clean and they're just really nice setups anyway that you can really exploit and really use. And you don't really need any directional premise for them either, which is extremely good. So I'm going to just show you guys essentially what it is and how to be using them. So a deviation, guys, is more or less just a reversal pattern, okay? That's what it really is. Like, it's when price runs a higher, runs a lower, and it pulls back inside of the range. So as with all reversal patterns, guys, essentially what you're looking for is a breaker setup, okay? That is either just above. So let's say you're going to long price, or let's say price deviated below a structure low. You want to be looking for a breaker setup above that structure high, above that structure low to get long from. Okay, so in this situation, guys, price more or less deviated below and accumulated. Okay, so the reason why these deviations actually occur is because price is accumulating below a low. So guys, you know how we talk about the market makers running highs and lows because there's liquidity above and below it? That is essentially what they're doing. But sometimes what they'll do is, instead of taking price and fully breaking below that structure low, continuing down or below or above, what they'll tend to do is they'll tend to run those lows, right? So give a false break above or below a low or high, and they'll accumulate orders underneath that area. So instead of price just breaking below it and then you get a retracement like here and then continuing lower, what you'll get instead is they'll basically accumulate all the orders that they want to stack up. They're stacking up all those orders below the market. And then what they'll do is they'll stack them up below the market because they want to take the market higher again. Okay, so guys, in this situation, all you're really looking for is you're looking for signs of accumulation, okay? So when you're trading this kind of setup, you want to look for how do you know they're accumulating? How do you know they're stacking up orders? And generally, guys, with deviations, or the deviations that I trade, what I tend to look for is I look for small contracted candles, okay? So candles like this, like these doji candles, like these small candles, even these, and especially these are beautiful. I love these, right? So you're looking for these kind of candles below a low or above a high that has just been run. Now, as much as you can see this on the 4-hour chart, usually you won't be able to see this on the 4-hour chart. And I've marked out some other examples here, which I'll show you in a minute, but I just want you guys to get the concept of this, right? All it really is you're just looking for an accumulation above or below a low. And that's going to indicate to you whether the price is going to continue lower or if it's going to continue higher, and then how you can maximize that. Yeah? So I think this is similar to the Wyckoff. If you know anything about Wyckoff and you've seen his model, this is more or less how his model kind of works and why it works, right? So the market will do false breaks in price, and it does that because it's accumulating orders and because it's just run people on the market. So the way that I kind of make the most of this, right, or make the most of these false breaks in price is, unlike a lot of breakout traders, right, and you guys will know this, especially a lot of you are retail traders as well. what will tend to happen is that, breakout traders will have they'll have their limits above and below the market. So they'll have their limit at the structure low to go short when it breaks that low, right? Or they'll have their limit above highs, right? And this is because for them, they think, okay, when, they want to get in as soon as price breaks that low. That's what they want to do. As soon as price breaks that low, they want to get short or they want to get long, right? So the market makers know this shit, man. They're not stupid. They know how everyone works. They know everyone uses the same technique. So what they tend to do is they just run these lows and they accumulate below below that area because they know there's going to be so much liquidity there. So because there's so much liquidity below those lows, it's free money for them guys. They just stack up their orders below the market, and then they just expand back up and take price higher. And everyone will be like, oh fuck, why did price just break below it and continue back up? Like a lot of retail traders don't have any explanation for this kind of price action. But we do. We understand that what they're doing is they're accumulating those orders to take the market higher. So enough bullshit, right? The way you make the most of this, is what you're looking for. You're looking for price to get above that structure low. Okay, so the first thing you want to do is because this could have been OT, so guys, that price could have just broken that structure right there, and it could have just pulled back into that area and continued short, right? Like that could have happened. However, the big giveaway is that you're going to get contracted candles, right? Like this, like small contracted candles, and you're going to get these like almost immediately after prices run a low. So usually what will happen is that it will come down, break that low, and it will just accumulate, and you'll get like these small candles for a good, price won't expand right back up straight away. And this is something to remember, like with these kind of, like when you see this kind of thing, guys, usually what price has done, it just runs a low and it continues right back down. But the difference with this setup is that you'll get a much bigger expansion back up into that range. Usually you'll get an expansion up into the OTE area. And this is because what they've done is they're accumulating orders. So because they've accumulated so many orders, it's not just going to be a quick expansion back up. They're going to really pull back deep inside of this range. And that is where you can really you can really make the most of this trade, guys, or this setup. So essentially what you're looking for is you're looking for price to accumulate, and then what you want to see is you want to see price get above that low, and you want to see it get above the breaker it used to take out that low. Okay, so two requirements. You want to accumulate, and then you want to see it expand up and use the breaker as support. Okay, and it's the same reversal pattern, guys. That all we're doing is we're applying our breaker reversal pattern, but we're applying it to this accumulation in price. So this manipulation and accumulation in price. That is what you're doing. So essentially, you're making the most of false breaks in price, and then you're understanding when these setups occur and how to actually maximize them and make money from them instead of being stopped out. Because you could have just got stopped out here, guys, or a lot of you would have got stopped out. But if you understand what you're looking at, then you can say, okay, and you can predict this. And this is the reason why I predicted this big up move, guys, in the following, last week and the week before. It's because of this accumulation. It obviously aligned up with the monthly block and other stuff, but it's mainly because of the accumulation I was seeing in price and what I knew this meant. So essentially, guys, all you're doing is you're just waiting for this accumulation to happen, and then you're just waiting, you're anticipating price to break above the breaker you used to take out that low, run that low, and you'll then use that breaker as support. Okay, so in this situation, guys, boom, we get a break and a close above that breaker high, and then we get a pullback down into that breaker and an expansion right back up. Okay, now, it's simple, guys. Like, we're not doing anything different here. We're literally using the same thing. Your stop goes a few pips below the breaker, and your entry is at the top of that breaker wick. Okay, now in these situations, guys, what I tend to do is oftentimes, like when you get these kind of accumulations in price, this will tend to be a counter trend trade. So more or less what price did is that it just kind of like runs a low, accumulates, and it's just accumulating because it's a counter trend. It's just accumulating to pull back inside of the range to go short or long, right? So essentially, guys, to be safe with this, my targets would usually just be blocks or bearish or bullish blocks. So let's say this was a short opportunity, or let's say it ran a low, right? If price runs a low, you want to be targeting bearish blocks inside of the given range that you are using this accumulation, or that the accumulation is happening in. So in this situation, the low that it ran was right here. Once it formed that new structure low, you want to be using the previous structure high and the new structure low, not that one that it ran, but the new one. And then you want to be targeting blocks inside of the OT area. So this would have been my target, guys, all right? And as much as it wasn't a big risk reward, trade, like it's only like what, 2.5 hour, you can still, like, you know how to scale down to the high time frames. You guys know how to scale down to a 5 minute to a 15-minute time frame, and you could have done the same thing right here, because this is a high time frame block, guys. Okay, so you could have done the same thing here, which is what I actually did as well to get into this trade, and you could have got an entry on the hourly with a 50 minute or a 5 minute, because this is a 4-hour breaker that you're using. If it was an hourly breaker that you're using, you could still scale down, but it's a lot more reliable with a 4 hour. So you guys, if you don't know how to do this, like, refer back to the scaling down video, but you could have scaled down and found an OT entry in this somewhere, right? But that's not the point. The point to understand is why this works and how it works, and that you want to be using the breaker reversal pattern to get an entry on this particularly, right? Now, let's just go over this again. But now we're going to go over it where we're expecting, now we're going to go over it where it just looks like you've got a stop run. So what I tend to do in these situations, guys, is when you get a stop run here, what I'll do is I'll scale down straight away to the 50-minute time frame. And what this allows me to do is see what is going, like, it allows me to see if there's any sort of accumulation below a low. Right now, as you guys can see here, price did actually break that structure, right? However, what we got is we kind of got like an accumulation below that low right there. Okay, so price broke it, but it wasn't like a clean, nice, several bearish down candles that are breaking through it. We kind of got a break, and then we got a pull back up, and then price is kind of like consolidating. So the two things to kind of look for, guys, and like the two ways to understand where the price is going to accumulate and like whether you're actually going to get a setup, or get a deviation setup, is when either price has very, very small contracted candles, like in the last example, and that's usually the best example, or if you just see like kind of like a zigzag consolidation like this. So if you saw that underneath the low, that will constitute for a good or for a deviation trade, right? Same thing right here, guys. We've got a deviation below that low, and we kind of got like a small consolidation, then an expansion back up, and then we saw price use this breaker right here, and you could have got long from that point, all right? Like, and this is what I was saying, guys, you want to be very, very conservative with your targets when you're using this strategy. And if you did, and you targeted a block inside of the OT area, boom, I would say this is the first block you would have had as your target. And then boom, there you go. You could have got out, and that would have made you a clean 2.5 hour. Or if you were being a bit cheeky, guys, you could have just put your stop below the breaker there, and that would have made you like a 4.5 hour. All right, so it's understanding, guys, we're using the same technique. Like, the entry technique doesn't change for these trades, but the framework of it does. All right, so these are the two ways you can do it. Okay, so this strategy works really, really well when you are looking at like daily highs and daily lows, or 4-hour highs and 4-hour lows, even weekly. Like, same thing with like weekly highs and weekly lows, monthly highs and monthly lows, right? When those get turtle soup on those time frames, scale down and look for this kind of price action. And if you're seeing like this kind of like consolidation, contraction underneath and above highs and lows, then all you got to do, guys, is wait for your break setup, like we get here again. Same thing, guys, and then go along from there. Okay, and that is what you're going to be looking for. And honestly, like, there's no juju to this, guys. It's the same thing. Okay, all we're doing is just the same thing, same entry techniques. However, we're framing it on different things. So instead of framing this on a 4-hour time frame, or framing this on higher time frame blocks, we're framing this on higher time frame lows and higher time frame highs. Okay, so same thing, guys. And yeah, look, we get the same kind of price action here. Okay, so price has taken out that structure low. What do we get here? Look at how small the contracted candles are. Okay, so we didn't even get a close below, we just got wicks through it, right? If we scale down to a 50 minute today, what are we seeing here? We're basically seeing a very small contraction at the low. Okay, guys, now for your highest success rate, you really want to be seeing like this sort of contraction below the low. But if it happens around the low, like it does here, that's more than enough. All right, that is more than enough. And I would say again, like, you can wait for a break. Like I would say wait for the breaker strategy. Or if you're getting a consolidation, if price doesn't actually break through that low, if it doesn't break through it using a breaker, then you can just use an OTE setup. Okay, it literally depends on the price action, guys. But the same, the strategy is exactly the same, or the framework is exactly the same. You're looking for a high time frame, low or high to be rated, and then you're looking for either one of our strategies. Usually it's going to be a reversal strategy, guys. So usually it's going to be like a breaker strategy, like it was here and like it was there. But in this situation, like, it was actually an OTE setup that you got right here. Okay, boom. You could even go in there again. So essentially, guys, what I'm really showing you is I'm showing you how to use the scaling strategy that I showed you earlier on in the series, but I'm showing you how to use it around high time frame lows and high time frame highs, because high time frame lows and high time frame highs, they're literally support and resistance as well, guys. Like, they're no different to blocks, except that they're in the form of a low or high. So there's still resistance and support levels, guys. So you're still using the same entry technique on them. And, guys, like, I've shown you how to use various techniques in the same bit of price action in this series. Like, I've shown you how to use the OTE setup, the break setup. I've shown you how to use deviations now, and I've shown you how to use block setups, all in the same price action, guys. And I've literally only been using that the last few days. So you can see how many setups you have here just in one bit of time, just in one section of time. So I hope you understood. I hope you took something from this lesson today, guys. And again, like, if you need any help on this, just give me a shout and we'll hop on a session and we'll go through it all. All right, so I'll see you guys on the other end, and good luck. Good trading.